All right, today we are going to tackle one of the most infuriating problems in trading, getting faked out by a move that looks absolutely perfect but just isn't. We're going to dive deep into the one indicator that the pros use to see the truth behind the price, and that's volume.
Oh, come on. We've all been there, right? You see a stock that's just ripping higher, breaking out, you jump in, and then bam, it slams right back down, stopping you out for a loss. It seriously feels like the market is just messing with you. But what if it's not a trick? What if there's a signal hiding in plain sight that you're just not seeing?
And this quote it nails it. This is the whole game. While almost all of us are completely glued to the price action, the pros are looking at something else, something deeper. They're looking at what's actually powering the move, and that thing is volume.
So, if price can lie to us, we need to find some evidence, right? We need to look for the hidden footprints of the big money. And that is exactly what volume gives us.
Okay, so let's be super clear on what we're talking about here. Volume is not the dollar amount being traded. It's the raw, pure number of shares that are being bought and sold. You can think of it like the amount of fuel in the engine, or the sheer energy behind any price move.
I love this analogy because it just makes so much sense. High volume, that's the elephants. We're talking about the big institutions, pension funds, hedge funds. They can't exactly hide a 500,000 share buy order, you know? Their moves leave these massive footprints in the market, and they're the ones who create the real lasting trends. And low volume? Well, that's us, the ants, the retail traders. Sure, all our little moves can combine to nudge the price, but there's no real conviction there. We can get scattered by just one big move from an elephant.
So this brings us to a really simple but incredibly powerful way to figure out what those elephants are actually doing. We can call it the volume price truth table.
The big question then becomes, how do we actually combine these two pieces of the puzzle, the direction of the price and the amount of volume, to get a clear signal? How do we translate what they're doing into a smart trading decision?
And here it is. This is the decoder ring. This simple little table maps out the only 4 things that can happen, and it tells you exactly what the market is probably signaling. This is your guide to finally telling the difference between a real, committed move and just a trap.
Let's just walk through this real quick. Look at the top left. Price is up and volume is up. The elephants are buying. That's a green light, a move you can probably trust. Now top right. Price is creeping up, but on low volume? Whoa, that is a huge warning sign. It's a weak move, probably a trap. And the same exact logic works for the downside. Heavy selling on high volume is serious business, but selling that just kind of fizzles out on low volume could mean the sellers are getting exhausted. Okay, so the theory is great, but theory is useless unless we can apply it, right? Let's put this to work on actual chart patterns that you see every single day.
First, we need a really simple rule. How do we even know if volume is high or low? It's actually super easy. Just add a 10-day moving average to your volume indicator on your chart. If today's volume bar is taller than that line, it's high. If it's below the line, it's low. That's it. It gives us a clear, objective way to measure it.
Now let's apply this to the thing we all love, the breakout. When a stock breaks through a resistance level on high, above average volume, that's the elephant smashing through the ceiling. It shows commitment. But what about a breakout on low volume? That's just the ants tiptoeing across the line. It's a classic trap that's just waiting to snap back.
And the same logic is perfect for reversals. Let's say you see a bullish hammer candle after a long downtrend. Is it legit? Well, just check the volume. If that hammer formed on a huge spike in volume, it's a huge sign that the institutions, the elephants, stepped in and started buying like crazy. But if it formed on weak, pathetic volume, be very, very skeptical. That move just has no power behind it.
So what's the golden rule in all of this? It's really about creating a simple, repeatable checklist for every single trade you even think about taking.
And here is that process in 3 simple steps. First, you find your price pattern, a breakout or reversal, whatever your strategy looks for. Second, you just glance down and check the volume. Is it above that 10-day average? And third, and this is the most important part, you only pull the trigger if that high volume confirms the price action. This simple little filter will save you from so many bad trades, I promise.
You know, it all comes down to this. Price can suggest a story. It can tell you a possibility. But volume provides the proof. It's the hard evidence that the big institutional elephants are actually behind the move, and that gives you the confidence to follow them.
So let's end on this thought. Price shows you what is happening, but volume shows you the commitment behind what's happening. And by learning to read both, you can stop guessing and start trading with real, hard evidence on your side.
So, are you ready to trade with conviction?